Hey, welcome back to Income Trading 101. Today we are taking a look at Anheuser-Busch InBev, otherwise known as Bud. Was thinking about who we could look at, which company to take a look at from a technical perspective. And this is a stock that, pays a dividend, a decently good one. And this is an old company. I mean, it's been around for a long time, and the beauty of sort of the quote sin stocks is that they tend to do well. Look at this; it pays a high dividend. So on a $70 stock, you're going to get a couple bucks in dividend money a year. That's not too bad at all, especially given that some companies pay dividend rates that look about like your savings account. So anyway, $2 on 70, I'll take it every day of the week, 3-4%. And let's go ahead and dive in. So I'm just pulling the data all the way back as far as I can just to get a sense of where this company's been over the last 10 years. And what's interesting is, we're only about 20 bucks higher, 20 bucks above where we were 10 years ago, which is very interesting. I know that bottled water has taken a huge chunk out of this market as well. But regardless, let's go ahead and take a look. I might pull that on back when we're doing the individual analysis. Let's take a look at like the last year roughly, which you can still see is strongly up. But let's take a look at our moving averages the way we always do. I hit that button 3 times because I want a 10-day, a 20, and a 60. As usual, I'm going to turn my 10-day green. I'm going to turn my 20-day red, establish that as a 20. And then I like having my historical marker, my 60-day. I'm just going to leave that as yellow. And there you have it. Gives you an idea of where we are right now. So we are definitely in a period of consolidation. In fact, as of right now, the 10-day is actually below actually, this is really interesting. You have the 10-day is less than the 60 by about 23 cents, but the 20-day is above both of them. So that's just a cue, a big mark. You see this crossover between the 20 and the 10 back on June the 24th, and we've been lower since then. And you can see we had earnings back in March, so we're approaching that period. Probably should be coming up here. Sorry, yeah, back in March, and then we had a dividend back in May. So we've been heading lower in this stock for a little while on the daily. You can see this will set up well for probably a little bit of Fibonacci analysis here in a bit. Let's take a look at the hourly and get a sense of where that is. So from an hourly perspective, we are clearly in a down move. You've got the 10-day low or 10 period lower than the 20 period, significantly lower than the 60 period. So definitely bearish on the hourly front, bearish on the 30-minute front, significantly so. You can see it's just trailing lower. And also, I would imagine, we've got a period of consolidation on the 15-minute because it appears that the 10 period is 6 cents higher than the 20, but both of those are significantly lower than the 60. So yeah, consolidation at the daily and at the 15-minute, and then bearish on the 1 hour and the 30-minute. So depending on your time frame, your time horizon, the bearish play seems to be in effect. And likely, if we continue downward, then that bearish is going to end up being played out in the daily too. Let's go ahead and get rid of the moving averages and switch over to the MACD, which is my favorite of the oscillators, of the sort of stochastic oscillators. Get rid of that. Got the MACD. And for those of you who haven't already, please do go ahead and subscribe to the channel. And also, if you're not familiar with these indicators that I'm using, either how they're calculated or what they are used for, There is a link to a video in the description for this one called How to Trade Stock Using Technical Analysis. Watch that video. It's a mini tutorial on technical analysis. I think you'll find it very valuable and interesting, and it'll help explain all of this. So on the daily, we had a little bit of a bearish crossover back here on May the 19th, but really it's the one that happened on June the 16th that matters, because it came on off and crossed the zero line, which is what I'm always looking for before I place a trade using this indicator. So that's definitely bearish on the daily with the MACD. Let's take a look at the hourly. So on the hourly, we had a couple of bearish crossovers back in June the 9th. We had another one on June the 16th, which I believe paired well with the daily. So you had this on June the 16th, and it immediately went below the zero line. So that's definitely bearish. And even though we've had bullish crossovers, notice that they haven't crossed the zero line, which is just an indication that we're going to continue in the previous trend, and that previous trend is definitely lower. So still bearish, kind of supporting the trend at the hourly level. On the 30-minute level, again, you had a bearish crossover on the 15th, and since then, even at the 30-minute, even with this huge bearish crossover or bullish crossover that we had back here on June the 18th, you can see that we have not crossed over into positive territory. So as we sort of flatline and just sort of oscillate, all positive or all negative, it to me is an indication of the previous trend just ongoing, and that's where we are right now. So still somewhat bearish in the 30-minute, and the 15-minute is going to be the same as well. This is really just hovered around this zero line, and let's see if I can pull it out a little bit. Even though we had a little bit of a bullish crossover there that went positive, once it crossed back under, we've just sort of stayed in the negative territory, showing that this is the continuation of that previous trend. So let's go ahead and go back to the daily and just look for some support and resistance levels. I can get rid of that as well. One of the things that I think is worthwhile is to do a little Fibonacci retracement of the move, even though the bottom of the move is going to be the what happened with regards to COVID back in March of 2020. I still just want to get a better sense of where we are right now. So that's it right now. Let me pull this over just a little bit. You can see that right now our close today is between the 50 and the 61.8% retracement, right? We have crossed the 61.8% retracement. What's very interesting though is that most stocks have not only recovered from their pre-COVID highs, but have surpassed them, and this stock actually has not. Right? Very, very interesting. I would have doubted that, especially given the increase in alcohol sales a bit during COVID. So still though, if you look on the daily and kind of ride this out, it's been heading higher. So very, very interesting. Let's get rid of this Fibonacci. We're just going to look for some key levels of support. Obviously, you see, like, I love when you can easily draw an upward trending line like that. That is a good sign for owning the stock right now. Even from where we're sitting right now, sure, we've been down. We've been in a downward trend since mid-June, but look at this. Every time it's hit this line, we saw it here in May of 2020. We saw it in October of 2020, late October, early November. We saw it again in February of 21. We hovered around that all throughout May and April, and then here we are touching it again on the 7th of July. So we could end up, or I'm sorry, the 6th of July today. So we could very well end up breaking this line, but if we do hold support, I assure you this is going to be strong support. In fact, I'd also like to draw a nice little parallel channel just to show how nice that could be. I mean, this if we were to get to the top of this channel, that would be closer to $90 a share. I mean, that's 20 bucks higher than where we are. And if I ignore all of the extremes, that still could put us back in the $83 range, another $13 higher. It's almost 20% higher than where we are. So if this stock does rally off of this current level of support, it can end up being very profitable for those of you who are either swing traders or just want to buy and hold. But let's go ahead and just go back. I'm going to look for some areas of support and resistance. Obviously, this area right there has played some support. In fact, rather than do that, I think I am going to go ahead and draw in there we go. Drawing a nice little triangle. So it'll let me kind of include a range, and I like seeing that range. Wow, very interesting. Very interesting here. So look at this. This box, you know, you see this this range, if you will, that's basically on low end $99 or $100, and on the high end $102.90. So roughly a $3 range, but that played that was support back in October of 14. It was support back in August of 15. September of 15 was in play. November and December of 16. We saw it again be tested in February of 18. And we saw it again in July of 18. We saw it play a bit of resistance back in July of 19. That's very, very interesting to me. Let's do another one. I'm actually going to zoom in on that one because look at this. You have this area here, arguably playing support here in March of 19, playing support in May of 19, providing a channel, right, of support in November of 19, and all of a sudden it plays resistance here this month or last month in June, right? So for people who don't think these levels come back into play, I think they absolutely do. And so that's good to know, because I would expect that if we do bounce off of this region, if we bounce off of this line, then what I would imagine is that we're going to go back and retest that support. That support would be around the $80 range in the stock, which would still be nice $10. You know, $10 on $70, that's a 15% return on your capital. So not bad. And just draw in a normal, we'll just do a normal, what do you call it, rectangle there. I mean, this could end up being a nice little triangle that we end up seeing a little later this year. So look at that triangle right there. You would expect this thing to go higher. This is actually making me far more bullish on this this company, even though it's been seeing some downward days here in the last few weeks. So that's why it's good to know your levels, just to get a better sense of where this stock is going. Doesn't mean the levels have to hold, but just know that the people that have been watching and trading this stock are aware of those levels, and so oftentimes they do come into fruition, and that's why I really do like technical analysis. So once again, if you're not familiar with all of this, like Fibonacci and whatnot, take a look at the video and the link on how to trade stock using technical analysis. And if you like seeing these videos, please do subscribe to the channel, Income Trading 101. I love making these videos for you. So thank you guys so much for watching. Feel free to leave a comment if you own this stock or this is one that you trade, or if you're just a fan or not a fan for that matter. Feel free to leave a comment, hit the up thumb movement, and that's it. Hope you guys have a great week. Happy trading.